Well, everyone in the markets at the moment is very much transfixed on what's happening in the US political situation. We know it's day one, going into day two now of the Trump administration's team. We've seen a move away from the Trans-Pacific Partnership. That's not going to surprise too many people out there, given it was never ratified through Congress. But certainly has sent a very powerful message through to the market that they're certainly looking at some stage of renegotiating on the North American Free Trade Agreement, or NAFTA. And that's certainly a very powerful message to the whole protectionist movement that is starting to concern markets somewhat. What will be the relationship between China and the US? And with the trade administration team that Trump has, there is looking like there is a real risk that we could see increased protectionist measures coming through at a time when economics around the world is starting to improve. And we really don't want to see fragility kicking in that stage as well. So people have been looking at what's happening in TPP. People have been looking at the Treasury Secretary's comments, Stephen Mnuchin, talking down the US dollar, backing up what Trump had recently said. And of course, that has seen some weakening of the US dollar. So really the big talking point has been around the moves that we've seen in the US dollar. If you look at the daily chart of the dollar basket on the IG platform, you can see a fairly pronounced head and shoulders pattern. We've traded through the neckline. It does suggest if we do see a retest and a rejection of this neckline, that we could see dollar index moving sharply lower over the coming weeks. And I think that's been an interesting trade as well coming forward. But of course, everyone's transfixed on what's happening with the political situation, especially ahead of the Republican retreat that happens on Thursday and Friday, of course, with Theresa May very much in the mix there as well, and what will be the rhetoric we hear from those discussions between Donald Trump and Theresa May as well. We haven't really seen too much while we're staying in the currency markets. We haven't seen too much in the way of sterling moves. Obviously everyone's focused on what's going to happen with the UK Supreme Court's decision on parliamentary's involvement in triggering Article 50. People have been buying the pound. We personally believe that this could probably trade up to about the 127 mark against the dollar, but maybe the Supreme vote is probably priced into the markets. But no real moves in the pound today from Asia-based traders. In terms of the equities, I think there's certainly an interesting bid in the mining space. You have seen the really good gains again coming through in the bulk commodity space. Iron ore, steel and coking coal futures have really come alive today. Rebar futures are up about 6%. Iron ore futures are up about 6%. And that's putting a really strong bid back into the mining space. The materials sector here in Australia up 2.5%. And that should resonate quite nicely into the UK Open, where we're seeing relatively good flows into our out of hours FTSE market. But certainly we're expecting miners to translate in some reasonable gains when that market's open, given what we've been seeing in the bulks. Base metals not doing as well. Certainly we're seeing some positive flows in Shanghai and high-grade copper up about 0.5%, but certainly lagging what we've been seeing in the bulk commodities. So that's one to watch. Apart from that, Japanese markets have come off nicely off their lows, but they're only down about 0.2%. And I think if you go back to the Australian markets, the first day probably since the 10th of January, where the market hasn't opened slightly higher, and we've seen traders looking to sell the open. It's the first time we're actually looking for the market to close relatively close to its highs, and that's a positive development for our market. But it's being driven all by mining stocks today.